I've spoken to Michael Saylor on this show, and he has the largest amount of Bitcoin on any public company balance sheet, billions and billions. And for him, it was the printing of money during the pandemic that got him as a CEO to look at this and say, well, wait a second. The stock market was down 35% and then back up 35%, and yet you're telling me inflation's 4%. But wait a second, if I look at my assets, all of a sudden they just went up 35%. So
are they worth that?
Yeah, and as a corporate, as someone who has to run a treasury for a corporation, am I really being, fiduciarily responsible by holding dollars when this is what's happening with them? And that made him go a deep dive and started looking at gold, property, and he came up with Bitcoin. And he said, this is the one thing that actually I think is my duty to invest in as opposed to these other instruments. So again, born out of a crisis is when someone saw something and said, something's not right here.
That's right.
So yeah, Bitcoin has a history of it.
That's right.
And now when I listen to these I call them kids in crypto because usually they're a bit younger, some of them seem to be more qualified in monetary policy than even Powell. I mean, they really have a deep understanding of it because they've kind of seen this parallel universe of crypto, which you talk about in the book. And I always make it's almost like an old Star Trek episode where you see Mr. Spock in the one world and you see him in a parallel world. And for the first time in history, we almost have this world of Bitcoin, which is this asset that's deflationary, that has a fixed supply. Yep. And then you look at everything that's going on with fiat currency that you talk about, and then one of the first times in history, you're like, wait a second, here's a real perfect example right in front of our faces of something that doesn't look right.
That's right. And you're right, and to the point about the pandemic, because to me there was as I mentioned in the book, the whole idea of the chaos and the addiction, that was pre-pandemic. Overdrive was pandemic, right? And that was the point at which the Fed and other central banks just went way back in to do what they were doing. And that was the point at which actually a lot more people got into investing in Bitcoin and asking questions about it.
Yeah.
And the technology beneath Bitcoin or underlying Bitcoin, all of the blockchain technology is used in so many instances right now, and I talk about this in the book, beyond the currency itself, whether it's in insurance claims or sort of home title verifications or sort of medical information. I mean, the idea of the technology of encrypting blocks of information so that there's actually sort of a pure source. The same way that blockchain is used in Bitcoin and with cryptocurrencies to basically encrypt the movement of that money from one place to another is also very powerful across a number of those different instances. And I talk about all the connections of those in the book, because when that money was created by the Fed, whether it's the $4.5 trillion that was created in the wake of the financial crisis or the $9 trillion that was created or doubled into in the post-pandemic period, there is no chain there. We don't know. Right? I mean, we can talk about how, a lot of it went into the, we can see the results, but there's no actual sort of chain there.
There's no public ledger.
There's no public ledger there. And so it's very different. And why not? And I've said this I've said this in Collusion, why is it that we're okay with the fact that all this, and this was before the double creation, that we're okay with the fact that all this money gets created and it doesn't go into the real economy like you guys promised it would. There is literally no tracking of that money to say, all right, well, created multiple trillions of dollars, and it built a new dam, and then it built a new sort of railroad, and then it built better highways, and then it was used for developing renewable energy so we could actually combat some of these fuel increases in the future in a strategic way. We don't know.
Right.
And again, that is the problem. And I think a lot of that, whether specifically or just because it was in the sort of ether of what people were thinking, I think was a big driver for the evolution of blockchain and Bitcoin.
Do you have kind of in the book final thoughts on where we go when it comes to cryptocurrencies and blockchain going forward?
Well, I think blockchain analytical tools technology is going to be used in more and more data security, again, from the standpoint of whether it's health, whether it's financial transactions or anything else. I mean, I do think that we're not going to not use it anymore. I think it's only going to grow. And I think even the blue chip companies that are involved in sort of developing methods of protecting and processing data using blockchain technology versus older technology are going to be the ones that sort of lead this metamorphosis, that are sort of in that transformative technology sector, I call it, that are going to take the world forward in that basis. So I don't think that's going anywhere from a Bitcoin perspective relative to, for example, central bank currencies. I think the popularity of Bitcoin has kind of driven central banks to be like, oh, wait a minute, we could lose our sort of power in the currency world. So we're just going to nip that in the bud, and we're going to talk about and create our own CBDCs, which might or might not have blockchain technology associated with them, but we're going to control it. So I think there's this, and I think finished the chapter with this sort of this fight between sort of the central bank driven cryptocurrency, digital currency, and the sort of outside of central bank components of just people using, B2B technology, Bitcoin outside of the system, et cetera. I think that fight is still on. I think just because Bitcoin is down at 20 or 21,000 or whatever from 60, it does not mean it's lost the fight. It's where it's right now. It is volatile. That is a problem to real people using it. So I'm a co-owner in a winery, in a wine bar in Ojai, California, and we're actually having a grand opening in a couple of days. But we're going to be the first winery of our kind, tasting room of our kind, to actually accept Bitcoin. And so we've had to go through the technology of that and make sure that there's a stability there, so that we can actually adapt and have customers adapt to that sort of up and downness of Bitcoin right now. But I don't think it's over just because it's down. I think it has a lot of room to continue to be relevant.
And what about CBDCs? Is that going to magnify this permanent distortion? Is that going to empower some of these institutions with even more juice?
Yeah, it's like another weapon in the arsenal, right? So it's like, instead of just fabricating dollars, you're fabricating digital dollars. Which means that even less so. I mean, the ship sort of sailed in 1971 when gold was unmoored from the dollar, and there didn't have to be a certain amount of gold backing the amount of dollars that were created. So I mean, that already sort of happened.
Some say they're digital anyways because they're just on a spreadsheet somewhere.
They are. I mean, they're electronic. Yeah. I mean, we work on our apps through our banks and everything else. I mean, there has been a sort of technological sort of advance of how we use money, but the idea of them being able to create dollars to put into the system that are not connected to any sort of real asset beneath them is just made easier by being able to sort of push CBDCs on the world, because in the limit, central banks will be able to create not just the currency that's connected to their government, that's sort of backed by sovereign debt and sovereign confidence and everything else, but they're going to be able to basically create central bank digital currency, whereby they can actually circumvent some of the transactions that the banks are doing, and in that way take more power from the banks, which is why the banks and the central banks don't see eye to eye on the whole thing. They're trying to sort of find their way, Wall Street and other banks, relative to the evolution of central bank digital currencies. But ultimately, it's a way for central banks to have more power over like the currency tools of our future by adopting their own. And I think that wouldn't have happened as fast. The conversation we would not be having right now, for example, if Bitcoin hadn't evolved as it evolved, when it evolved, in retaliation to what central banks did during the financial crisis.
The greedy bankers are about to do it again. In 2008, they crashed our financial system and nearly bankrupted the entire global economy. Then they received trillions of dollars in government bailouts. And after, they demanded fat bonuses paid for by you, the taxpayer.
It turns out the banks haven't just been screwing the American taxpayers, they're also screwing over their investors. Turns out the banking industry is the worst place you could put your money, despite enormous taxpayer bailouts.
Now the bankers are back to take away your financial freedom. They lie and tell you that cryptocurrency isn't safe. They try to make it illegal for you to choose how to invest your hard-earned money. They lie and say cryptocurrency is used by money launderers and criminals. But look at the record. It's the banks themselves that launder hundreds of billions of dollars every year to the biggest criminal operations in the world.
Leaked documents have revealed how some UK banks have helped criminals, money launderers and Russians under sanctions.
American authorities discovered that the Sinaloa cartel moved $881 million through HSBC accounts as bank officials turned a blind eye to the illegality.
The bankers lie and say cryptocurrency is not a real investment. Meanwhile, the smartest CEOs in the world are buying billions and billions of it. The truth is that banks lie about cryptocurrency because it makes them scared. The banks take $9 trillion per year of your hard-earned money, and they are worried that they will finally be exposed. They're scared because crypto means they can no longer control your money, which means they can no longer control you. They are scared because you might actually understand your money and intelligently decide what to do with it. Now is the time for us to come together, fight back, and take control. It's time to educate ourselves, our families, and our communities. Because financial education means financial freedom. We know that cryptocurrencies will help us build the new decentralized financial system of the future. A banking system that is of the people, by the people, and for the people. A banking system where access to finance is a fundamental human right. A banking system that is free and fair and welcomes all humans on this earth. The DeFi revolution is happening. We, the people, can no longer be fooled. We choose to take control of our finances. We choose to take control of our freedom. We choose to take control of our future. Join us, and let's take back our financial freedom forever.